If you want to know what's going to happen before it actually happens, all you need is a crystal ball. No, maybe a money GPS. Look, I'm going to explain to you today two factors which will determine what happens before it actually happens. I'm talking about something that is statistically proved over and over again to be accurate. How does that sound? Well, let's get into it. Welcome, truth seekers. You've landed in the right place. I want to bring you what others simply can't. So join this grassroots movement of nearly 300,000 people. Hit that subscribe and the notification beside it so that we can go on and look at this information together each and every day. Speaking of which, do you want to know the one primary indicator that basically nobody talks about for some reason, even inside the financial world? The very first one is this. This is known as the China credit impulse. And you might see that in articles mentioned here or there, but it's not prominent enough, in my opinion. This happens to be a very good indication. And you could see what is listed on this chart. I know there's three things there. And you will find this in different places. The source for this one specifically is in the description under sources. You could look at it. The blue line, China Bloomberg Credit Impulse Index. They're also showing you that was the blue line. The orange is the China housing price year over year, not doing so good. It has bottomed out, but we'll see what happens. And then looking at the stock market, okay, the red line. And the China credit impulse, I'll read you the description, but it's basically like how much loans are happening inside of China. That's like the generic way to look at it. How much loans are happening? How many loans? And so we're going to look at that, but it's as a percentage of the GDP. But for the most part, just think of it, how much money is being lent out? The more money that's being lent out, that has a stimulative effect. Businesses are opening, businesses are expanding, businesses are hiring, businesses are doing this and that. Individuals are buying real estate, individuals are opening up businesses, and so on. It's just an economic indicator in its truest sense. What's interesting about the China credit impulse is that it tends to signal what will happen at a point in the future. It's hard to tell. Some say 6 months and all these things. I don't agree with necessarily the time frame. But what that means is in a short period of time, that will be felt in the United States and the rest of the world. It is a very clear indication. It's not, 100%, but it gives us a look at what's going to happen in the future. So if that China credit impulse is positive, we see it growing, that's an indication that there's more growth coming. Imagine it's almost as if like quantitative easing or like some stimulus package, but it takes place in a different country and then eventually comes towards you. It's like a tsunami. It happens way far away, but then it comes towards you. Do you see what I'm saying here? So let me show you the description that they have, and if it makes any more sense to you. You can look at it. The China Impulse Index equals new loans over GDP. Credit Impulse Index measures the credit cycle in a market. When the economy recovers, the index rises. China Credit Impulse has less to do with GDP though. China usually uses property to stimulate demand when the economy downtrends, so new loans are usually backed by real estate. But as China gains more and more control over its housing market, part of the new loans is starting to turn to the stock market. And so that's just the explanation here that they have. And I think for some people, that might be a little bit confusing, but it's just basic. When China is doing something, it's going to have ramifications through the rest of the world. If China's locking down for 3 years, that has a huge impact. It has a domino effect. And we did feel that through 2020. All of a sudden, you couldn't get all the products that you were used to. Oh, there's shortages of this, there's shortages of that. How many times did people go to the store? I know, I saw from you. Put it in the comments below. Where shelves were just empty, or they had like one type of product that they just put around the entire store, faced it up so that it looks like it's full, but the honest truth is that it wasn't. In fact, they even had like canvas type material or something that they put that looked like the products, but it was literally just like a sheet that would go in front of the shelf to make it look full, and yet there was nothing there. Empty shelves being covered up. Very strange. That was big during 2020 because of the heavy reliance on China. They locked down. The transportation was a big mess as well. The ports were a disaster and so on. China credit impulse, we could see that. You could see on this chart right here, 2020 was obviously declining. It was coming down. It came all the way down. We've seen these things before. Then in 2020, they tried to get the stimulus happening. They tried to get their people out. Different things happening because of, trying to get loans and so on. There was many different things occurring. 2020 was kind of a messed up time frame, but you could see it there. Okay, so that's one. Now we're going to look at the second one. And this is one that has been known for a while, and I just wanted to show you really quickly. This is talking about South Korea. South Korea's economy, a bellwether for global economic trends due to its heavy reliance on trade. And also, they tend to bring out their data earliest. So when you're getting all the data from all around the world, South Korea happens to be one of those first countries. So in two ways, it happens to be a bellwether. So you could see that it's got the semiconductors. If it's Samsung, for instance, Samsung is making the screens for not just Samsung products, but maybe Apple products, maybe, LG or something like that. They're doing this for all these different companies. And you may not know that because you're buying, let's say, an Apple product, but inside of there might contain a lot of products that are from South Korea. Okay. So it happens to be another indication. So we watch what happens in South Korea because that then goes through the rest of the world. Now, it's not like, they had one bad report, suddenly everything's going to go down the next month. No. But we see a trend. If we start to see 2 months, 3 months, 4 months, and things are declining, then we have an issue. So when we couple these two things together, we kind of have our own little money GPS, wink, wink, where we can kind of tell what's going to happen here. Right now, things are really in flux. And so it's a little bit difficult to tell. The China credit impulse, it looks like it's, going positive. South Korea's data kind of coming down at this point here. So things are really messed up. Why? Because of increasing interest rates. That has thrown a whole monkey wrench into what was seen as low interest rates, low inflation forever. So those are the two things I would pay attention to. There's another thing. It is so interesting to see how we have what I call the money mirror method. And that is something that if you just pay attention to it, you know what's going to happen in the markets. So you start adding these things on and it becomes it's like, imagine there's fog, like the markets are so foggy all of this time. But if you had these different things, suddenly you can brush that fog away. And so the money mirror method is something that I just coined the term. I know this is not something that is, people have talked about it before, but essentially we're looking at the total liquidity in the system. Have you seen this, by the way, the money mirror method? Some people are asking me if there is actually a course based on it, and I'm considering doing a very low cost course that just gets into the specifics, like how to use this in order to determine, is it a buy or is it a sell? I would be interested in making that, but I just wanted to give everybody the formula for free. That was the point. If you wanted like the specifics, I could make something, but I just need to know if there's demand there. Okay, so you let me know if you guys are interested in that. Here is the formula. Learn this now, okay? Money mirror method, and you'll be able to determine what happens in the stock market before it does with basically perfect accuracy going back to 2009. Click this video and I'll see you there.